Hello and welcome. You're watching NDTV Profit. This is Ask Profit. I'm Hersh. Sayta. With me is Mahima, Vachhrajani, and we're going to take you through the next half an hour. All your queries, which you can write to us on. The number will be flashing at the bottom of your screen right away, and you can write to us. Do give us the quantity as well as the number of shares held by you, as well as the for how long do you intend to hold it for. Give us more details so that we can get you the correct answers to all your questions. But quickly on to where markets are at. Let's pull up the Nifty 50. Clearly, we started off not on a bad footing at the start of trade today, but we are largely where we started off, around 0.1% or thereabouts lower. Where's the pressure coming from? Let's pull up the contributors on the Nifty 50, and HDFC Bank being the key loser in trade within the Nifty pack. Obviously, but now down, 85 negative points contributed by HDFC Bank, pretty much eclipsing all the positive contributories on the Nifty 50 in trade today. HDFC Bank alone driving the Nifty lower and pressuring the Nifty. But outside of that, let's pull up where the broader markets are currently placed at. Let's pull up the Nifty mid cap. There you go. A slight bit of positive bias coming on to the Nifty mid cap. So slight positivity, the Nifty small cap as well, slightly in the green. Pretty much even Steven where the mid and the small caps are concerned, around 0.1% higher, 0.2% or thereabouts. Let's pull up the advanced decline ratio if we can, as to where we stand today. And there you go, almost even Steven in terms of advances to declines. So not as bad, but slightly volatile in that sense where we're seeing markets. Let's quickly pull up the sectoral indices, see which ones are buzzing in trade. And there you go. Those are pretty much all the buzzers. You're seeing good traction on the Nifty IT, notably around 0.5% or thereabouts higher. And outside of that, the Nifty Bank down around 0.5%. That's the one which is causing pressure, at least on markets. But one set of stocks which are definitely in focus today is the wind energy stocks. And let's pull up something like a Suzlon. Let's pull up an Inox Wind. All of them a buzz in trade. In fact, Suzlon was up nearly 5% in trade. Inox Wind up 7+%. Very, very strong returns for today alone seen in some of these stocks. Mika is here to try and break down what's happening in the space. Mika.
So, what's the main reason why, the macros are changing. Now, the wind energy sector did see sluggish growth in terms of capacity additions over FY17 to FY24 when you compare to the solar industry. However, now the traction is gaining momentum. Development process have been streamlined via the government with the removal of reverse auctions for plain vanilla wind projects from FY25. The government's also auctioning, organizing auctions for wind and hybrid projects specifically, and they've also introduced renewable obligations targeted towards wind power itself. In terms of market size for wind energy in FY25, we spoke to management like Inox Wind, who pegs the domestic market size of 5 gigawatts for FY25 itself, and Suzlon Energy pegs it at 5.5. The industry experts, as per Investec, says the market could also be fueled further by 3 to 4 gigawatts due to the capacity that is coming in from the commercial and industrial space. So the overall opportunity size going forward could be 13 to 14 gigawatts per year, and this benefits these wind equipment manufacturers, Inox Wind and Suzlon Energy. The strong earnings momentum is also, caught up in Q1 FY25. For Inox Wind, revenue and EBITDA were up 83% and 325% on a year-on-year basis. Currently, Inox Wind has an order book of 2.9 gigawatts, which implies a revenue potential of over 17,000 crores over a 2-year period. And with terms of Suzlon Energy, their Q1 revenue and EBITDA were up 50 and 78% respectively, and net profit was up 200%. Suzlon's current order book is at 3.8 gigawatts versus 2.9 gigawatts just last quarter, and they peg key demand drivers like onshore potential, state-specific wind bids, and the SECI's auction for green hydrogen. And lastly, when you talk about valuations, yes, the EV to EBITDA multiple for both these two companies are currently trading around 104 and 105. However, when we did our calculations for the FY25 earnings potential based on the management commentary and brokerage inputs, Inox Wind's EV to EBITDA valuation could decrease to 37 in FY25, where Suzlon could decrease to 62.
Thank you so much for breaking that down for us. Well, on this edition of Ask Profit, we are joined by Astha Jain, who is Senior Research Analyst at HEM Securities, and we are also joined by Swati Hodkar from AVP Technical Research, who is an AVP as a Technical Research at Nirmal Bang. Welcome to both you beautiful ladies. Swati, I'll come to you first. How does both of these stocks, Suzlon and Inox, look to you on the charts?
Good morning, Mahima. Really, both the stocks are really doing very well on the technical front. Yesterday, we have seen that the Inox Wind has given the breakout of the previous swings high, which was coming at around 190 levels, and it headed up to 240 almost that level. I believe that this momentum is likely to be carried forward towards at least 250 to 270 levels on the higher side. So those who are having any long positions, they can definitely hold on for a 250 levels target. Coming towards the Suzlon, yes, Suzlon is also really doing very well. Slowly and steadily, it's moving ahead. And as of now, we have seen a new 52-week high towards 84 rupees. This momentum is likely to be carried forward towards to 90 levels. So I will suggest to, at least at the current level, I will suggest to book a partial profit, because we have seen at this stretch rally in this particular counters, and we might witness some sort of a profit bookings if the stock gives the breakdown of 80 levels on the downside. Then it might drag towards to 75 to 70 levels also. So I will suggest to book the partial profits, and remaining partial you can hold on by maintaining a strict stop loss of 82 rupees, and immediate levels on higher side we can see up to 88 levels.
Wow, clearly bullish on Suzlon there, Swati. Astha, let me come across to you. Mani Bhushan Pandey, and we'll start with queries right off the bat. You can send in your queries, number flashing at the bottom of your screen. But we have Manu Bhushan Pandey. He wants to understand whether this is the right time to invest in Tanla platforms.
Talking about discount the Tanla platform, I think this one should look for more downside and then make entry into the stock, because right now what we feel that we are going ahead, we can expect some sort of margin concerns going ahead. So I think due to that we can see further downside. Right now it is quoting at around 910 level. I think 850 or 860 are the right level to enter into the stock. So rather than entering at the current price, we would like to recommend to enter at the lower prices, because we are expecting some sort of more downfall in the stock.
Okay, sorry Astha, I'm going to take one more quick question with you. So if you're expecting a margin decrease or some bit of margin pressure, when do you expect that margin pressure to ebb and to change? When will the tide change in that sense?
Although we are expecting some sort of margin pressure, but now what we are expecting in the terms of the top line, that they will be able to maintain the CAGR growth of around 14 to 16%. So if I combine all these two factors together, I think the margin turn will take at least 3 to 4 months down the line, which we can see some sort of margin expansion, maybe not in the Q2, but from the Q3 onwards. But due to the increase in the CAGR of their sales, we are expecting this stock to perform good in the longer term. However, in the short term, some fall can be witnessed. Hence, we are recommending to buy on the dips.
Got it. So buy on the dips for that one. Well, the next query is from Saurik Sao. He's asking, he's holding 100 shares of Cochin Shipyard at 2,885 a piece, and he wants to know what's the outlook for this. I think Astha, I'll come to you. The kind of run up these defense stocks have seen. What's your view on Cochin Shipyard?
So talking about this counter, we are expecting Cochin Shipyard to maintain its CAGR growth of around from FY24 to 26 of around more than 10%, and that is on the basis of the pickup in their major segments and increasing the margin in their business, which is the ship repair business. So this segment is basically a margin accretive business. So we are expecting the company to show strong margins in this segment also, and we are positive on this counter, recommending a buy as well as hold with the initial price target of around 2,400.
Okay, Astha, let me stick with you. Swati will come straight to you after this. But while we are on some of these defense counters, we have another query with regard to HAL. We have a viewer which holds HAL at 5328 a piece. Wants to understand your view. Continue to hold HAL at this value, or should he add more, is what he's asking.
I think one can continue its holding because execution is picking up, and what we are seeing is the order book is also showing strong momentum. But for making a new entry, we should wait for some downfall because the stock has already shown some sort of upside movement in past few days. So we are expecting the stock to show a strong momentum in the long term. So we are recommending a hold with a price target of initially 5,000. But for making a new entry, some downside can be expected at around 4,700 levels. Then one can make a new entry also in the account.
Okay, Swati, I'll come to you now since we're already discussing the entire defense pack. Any particular stock that is looking attractive on the charts right now?
See, on the this particular counter, HL also really looks good, positive. But on the technical front, the stock has given a very good kind of a rally. I believe that any dips towards to 4,400 levels can be accumulated as a fresh long positions. On the technical front, I'm putting a target of 5,600 to 6,000 levels on the high side. So HL really looks good, which is fundamental as well as on a technical point of view, the stock is really strong.
Okay, and Swati, your view with regard to ONGC, because that stock is on a tear. We have Sushant who's wanting a view on ONGC. My understanding is it's more fundamental than technical, but while I have you, I'd like a technical view as well because the run-up has been sharp.
Yes, Hersh, you have rightly pointed out this particular counter has given a very strong momentum in the past 2 months itself from almost 250 levels to 345. It's currently trading nearby the 52-week high. I believe the overall setup, the stock has given the breakout of the flat patterns in the last previous 2 months, and we have seen a one-side rally on the higher end. I believe this rally is likely to be continued up to 400 levels. So for a longer term horizon, definitely one can hold this particular counter for a target of 340, but one can maintain the strict stop loss downside at around 310 levels. And if we are, any long positions can be built up nearby 310 levels. So that will act as a very crucial support level. So any dips towards to 300, 320 levels, one can go for a long positions, but at the current market price, definitely one should hold the major long positions.
Okay, Astha, coming to you on ONGC also, from a long-term perspective, what's your outlook on ONGC?
So from long-term perspective, we are positive on this counter, given the fact that management has reiterated the fact that due to the ramp up in KG 98/2, they will reach the peak of oil and gas output by Q4 or FY25. So, and in fact, what we have seen in the result was also there was a beat. It was due to the lower operational expenses. But now, looking after the management guidance, also we are positive on this counter. In the longer term, this counter has the ability to touch the level of 390 to 395. Recommending a hold as well as buying on dips can be also applied to this counter as a strategy wise.
Okay, Astha, we also have a viewer holding 10,000 shares of Vodafone Idea at 14.44 a piece. He wants your long-term outlook given the fact that Q1 FY25 numbers have been better than expectations to a certain extent.
Yes, they are better than the expectation, and that is why we are some sort of optimistic on this counter in the longer term. Maybe in the shorter term, because what we have seen that after the OFS, the stock has seen a sharp rise in the stock prices. So I think if some dip will be available for this counter, then it is a better choice to make an entry. Otherwise, hold is recommended for this counter in the longer term. And price target which we are giving it to this counter is around 16.5 to 17 at the initial levels.
We have Varsha Bain from Surat. She's holding 100 shares of IRFC at 33 rupees a piece. Wants your view, if you can give us, Astha, your view with regard to IRFC. What's the sense like? The stock has been a multi-bagger of sorts, trading at now sky-high valuations. What's your sense?
So I think this is the sole borrowing arm for the Indian Railways, and that what we know that the government has a full focus, and they have really announcing, recently the all new project, 8 new projects, especially in the Indian Railways. So I think this counter will definitely going to continue to show strong momentum ahead also, and we are expecting this counter to show to the upside till the level of 200 to 210. So we are expecting this counter to perform much better even from here. So recommending our hold with a price target of 200 to 210.
Okay. The next query is from Venkat. He's holding 200 Ola Electric shares at 107 a piece, and he's asking whether he should add or sell. Swati, I think I'll come to you. 2 days straight, Ola Electric saw an upper circuit, and today also it's roughly up around 7%. What do you think? Should he add or should he sell?
See, technically, we don't have a much data on this because it's a newly listed company, but definitely looking towards the last 3 days price momentum or the price actions along with the volumes is really doing very well. On the technical front, as of now, 100 rupees is acting as a very crucial support level. So as long as this particular counter holds 100 levels, I believe more price momentum can be seen on the higher side, at least up to 150 to 160 levels. So it's a hold from my end on the technical front and by maintaining a 100 rupees stop loss.
Sure. Astha, let me come to you on fundamentals with regard to this one, 6% higher today as well.
Right. Even we have talked about this counter earlier also. So I am recommending subscribe on your channel with the listing in as well as long-term purpose. But it was a fantastic listing, which even I was not expecting it to be like that. So now at this price level, the price to sales multiple of more than 8 currently the company is quoting because we don't have the another quarter results in our hand. So at this point of time, it seems to be, looking little expensive from the global peers. But maybe the results find their own way and stock can show some more upside from here. But right now, don't buy at these levels. Let the stock fall from here and then make a new entry because it has already risen a lot and now the valuations are becoming little more expensive. So we are positive on this counter, but recommending a buying on dips rather than buying at the current price. And again, our price target now stands somewhere at around 130 to 135 at the initial levels.
Okay. Well, the next query is from Tarsim, who's from Punjab. He's saying he's holding 3,000 Tata Steel shares at 165 a piece. Swati, I think I'll come to you on this one. Should he be selling this or holding this?
See, Tata Steel is definitely a good counter one should have into their portfolio. But since the commodity market was not really doing very well from the last few months, the metal pack really, and we have seen a sharp correction in this particular counter as well. But I believe the depth is limited now on a downside, so no worries. We should not book the losses at the current market price, but on a downside, it might find a support nearby 135 to 140 levels, and we again will see some reversal in this particular counters towards to 180. So if you're looking for a longer term horizon, definitely one should hold this particular stock into their portfolio.
Okay, let me come to you. Let me stick with you, Swati, rather. We have 500 G. Krishnamurthy holding 500 shares of Vedanta at 360 rupees a piece. Wants to know whether he should sell at this point or how are you playing this on charts?
See, on the charts as of now, we are witnessing Hersh a little bit selling pressure and we are witnessing a profit booking. And if we look towards the momentum indicators such as the RSI, it's showing little bit cautious view at the current level. If the particular client needs the capital, then definitely we should book the profits because I believe downside we might witness some sort of a fall towards to 400 to 380 levels. Up to that level, we might witness some sort of a corrections. So if he's in need of a money, definitely one should book the profits. If not, and looking for a longer term horizon, then I will suggest to hold on this particular counter. Upside for at least 6 to 1 year, I am looking for a target of 500 rupees on the higher side. So for longer term horizon, one should definitely hold this counter.
Okay, the next query is from Jigna Thakkar. She's holding 100 L&T shares at 3,713 a piece. Astha, I think I'll come to you. What is your outlook on L&T?
So I think there's no need to worry. Definitely, she will going to see her cost price of around 3,700 odd levels. Talking about this counter, the order book is continuously increasing, and it is one of the largest order book in the capital goods space. So we are positive on this counter. Recommending a hold as well as buy on dips can also be, as a strategy wise, can also be applied to this counter. Initial price target is at around 3,900 to 3,950.
Got it. Astha, let me stick with you. We have Dikshita who's holding 160 shares of RVNL at 599 rupees a piece. What's the outlook and what should she do?
First of all, want to recommend the target. Target is somewhere at around 645 for this counter, which we are suggesting. And now talking about this counter, although what we have seen in the results were subdued of Q1 of FY25. If I talk about even profits or as well as operating profit, etc. But what we know is that RVNL will be the prime beneficiary because the kind of work this company is into, and recently the news flow that government is floating 8 new projects in the railway space is definitely benefiting this counter. So on the basis of a strong news flow, we are expecting this counter to perform higher from here. So 645 can be attributed as a price target, recommending a hold on this counter.
Okay, the next query is from Hersh Rathor. Swati, I'll come to you for this one. He's holding 275 Jindal Steel shares at 1,000 apiece, and he's asking whether to hold or sell.
See, as of now, as I said, we are witnessing some sort of a selling pressure into this all the metal packs. They are not performing really well, but over a period of time, we might see some turnaround in this particular sector as well. As of now, the stock is just hovering nearby its oversold zone, so the selling pressure will get wiped out at the current levels. But downside, it might find a support nearby 870 odd levels. So up to that level, we might witness some sort of a corrections. But for a longer term horizon, definitely it's a good counter. One can hold there into the long positions. If possible, if any fall comes towards to 860 to 870 levels, one can add on into their portfolio, so the buying price will come down. And I believe this rally is likely to be continued towards to at least 1,000 to 1,200 rupees on a over a period of time. So it's a hold from my end.
Okay, let me come to you, Astha. Now, this is a classic case of how retail investors have made money. We have Mohit from Ludhiana holding 500 Coal India shares at 152 rupees a piece. He wants your outlook for the next 2 years when it comes to Coal India.
So outlook is quite positive. First of all, want to give the price target 550 to 575 at the initial level. We are suggesting to our clients also for this counter. So Coal India is looking good to us. And for the 2-year perspective, definitely this counter will going to benefit, as we all know that coal demand in India is on the higher side, and company will be definitely benefiting from such sort of heavy demand. In fact, the results which came by were also very strong. So we are positive on this counter. Initial price target 550 to 575, but from the 2 years perspective, the price target can be much higher.
Okay, Asa, I'll stick with you again. We have a query from P. Shivananda from Bangalore. He's holding 5,000 Indus Tower shares at 447 apiece, and he wants a long-term outlook on Indus Towers.
So long-term outlook is positive on this counter also. Recommending a hold on this counter. Initial price target can be set at around 450 odd levels.
Okay, with that completely out of time on this edition of Ask Profit. Thanks everyone for tuning in. Thank you for all your queries. Thank you both Astha as well as Swati for taking us through all the views that you all have. And with that completely out of time, thank you so much viewers, from Mahima, myself, everyone who puts the show together. Thanks so much for watching. Stay tuned to NDTV Profit.